there are a lot of especially negative headlines out there. We have record inflation, skyrocketing interest rates, war in Ukraine, resurgence of COVID in China. So there's so many things out there that can cloud your judgment, perhaps if you let just the headlines alone and your emotional reaction or your gut instinct guide you in your decision-making process.
Yeah, I mean, look, I'm news editor, so I try to pay attention to the news. The news is important.
It is
Don't let any.
important.
It
It
is
is.
important. It is important, and you should try to, be aware of things, and that can sometimes give you more conviction about why a particular industry or company might do well. But you ultimately, it's not so much the news; it's the reaction to the news. I mean,
Yes.
because I think everybody was surprised in 2020 when we're going into this massive recession, everything's shut down, and very quickly we had this huge stock market run. It was not easy to predict. You have to see how the market's going to react to things. It's like, well, this news could be, I don't know, this seems negative to me. And then the market or that sector or that stock rallies. It's like, well, that you have to adapt to that. So yeah, you want to be paying attention to the news, but ultimately it's not the
Mhm.
news that really matters.
Well, it does matter, but it's just one part of the decision-making process. You can't let that override everything else that you're seeing, and that's why we look at charts, because the charts are going to guide us for what to do, whether it is the major indexes, the S&P 500 showing a follow-through day in mid-March and the Nasdaq shortly following. If we didn't react to that signal, even though there was so much negativity surrounding us, we would have missed out on a great couple of weeks there. And I even remember looking in the IBD Live Q&A at the time, people saying, "Oh, there's no way this follow through day is going to work. We're immediately going to retest the lows." So you have to trust what the charts are telling you, and that's not to say that all follow through days work, but you can't ignore the market signals.
No, and that's why we're telling people to like step in slowly, go into things that are working. I mean, one concern is that there were some stocks to buy, but they weren't some of the traditional growth areas, not so
Right.
much. I mean, there might have been these little areas, but it was definitely in other areas of the market, and so you had to adapt to that. Obviously, when the market turned again at the end of March and into April, that was like, well, you may want to step back or definitely focus on the areas that are working. And then just like that's what the charts were showing, that's what the indexes were showing, the sectors, the stocks. And that's just the way to try to be nimble and just be paying attention to all those kind of factors so you can, try to, if you're going to outperform the market, you really have to be paying attention to what the market is saying.
Yes, and so for those watching the video version of this live, I'm sharing my screen now and showing the S&P 500 because let's unpack the market technicals here a little bit that we've been talking about before we start digging a little deeper into stock selection and what we're seeing underneath the surface. So and if you want to go back in the archives, we have had past Barron's Live episodes where we're talking about really staying in step with the market, avoiding corrections by going to cash, looking for follow through days as well. So, Justin and I did that episode. So, I highly recommend you checking that out. So, we won't belabor the point too much, but just to give you an idea of what we are talking about. So the S&P 500 on March 16th had a follow-through day. That was a very strong gain in volume, heavier than the session before. And that's a signal that we use, Ed, to, as you said, start dipping our toe in the water. We did see some stocks that were breaking out of proper chart patterns at that time, but you can also, if you're not seeing a lot of setups, like you were mentioning, especially in the growth area, you can get exposure with index tracking ETFs as well.
Yeah, and they're like that's there were reasons to be skeptical. I mean, it wasn't the
Mhm.
greatest. We had sort of filtered around. It was a long time into it, but we were breaking a downtrend. Finally, got over the 21-day line, and then it kept on going. This was part of a really big 4-day stretch, and that later on the Nasdaq followed through, and it was just like really power. We were powering through various resistance levels. Getting above March highs, getting above things. And it's just like, okay, this is, it can take, and this is why you want to be ready. You've got to be,
Mhm.
part of being, not being flat-footed is to be continually working on things like your watch lists. And you
Right.
might be thinking, well, why should I bother? The market is almost at lows, and the Nasdaq actually did undercut lows on March 14th. So right in there. So it was, you're thinking this is going down, but you keep
Mhm.
working at it because it can turn around so quickly. And for
Right.
those who were paying attention, a couple days later, 4 days later, there were some things to buy and take advantage. Now, it's too bad that the rally didn't last, wasn't powerful for much longer. But this is when you want to get in because some of the best stocks will often be getting out at that time.
Yes, and as you were saying, staying in phase with the market doesn't mean that the rally is going to continue forever and ever. Then okay, we're in. Let's add exposure when things are working, but what's next? That's again where we rely on technicals to show us, hey, are we getting to be at oversold levels? Could we expect some sort of pullback? If yes, which is what we were starting to say, a couple of days or a week or so into the rally, that maybe consider locking in some of those profits and still keeping a tight leash on things and not letting your guard down.
Yeah, I think those were was all good advice that we did in those last couple of weeks because yeah, it was getting up to levels like the 200-day line on the Nasdaq. It just seemed like a natural area where it might pause, and you might just say, well, let's just wait and see. Let's wait and see. Now, if things would pause and then we move forward, then it's like okay, let's maybe add to positions, add back to the stocks, or add buy new positions. But it was a good reason to wait because we had run up quite a bit, and it just this is the kind of stuff that you want to be because taking partial profits that's not and very quickly has been a really good strategy over the past year because there's been a lot of choppy markets and sectors have come in and out of favor, and that's just
Mhm.
been the nature of the market. These headwinds out there, you can see how the market has come down so quickly, again even faster it seems on the way up, so that you just have to be able to react quickly and adjust to that kind of environment.
And also on the thread of being open to all possible and potential scenarios, we also flagged the potential that this could just be a bear market rally instead of the true end of the correction. And this is again where market technicals were our guide. We went to uptrend under pressure when we got the gap down on April 6th, and that's a sign to start raising some cash, and we have seen further weakness since.
Yeah, and it just the you got to be these signals came on pretty quickly, and it has not improved. And I think it's a lot of it. I think especially on the growth stocks, we had this maybe short covering or maybe just this bargain hunting, and it just
Yes.
didn't sustain itself at that point. Now maybe we'll pause. And again, there's so many headlines going on, possibly affecting the market. There are sectors that are working, but definitely, especially on the Nasdaq and these areas they're just it's just not doing well right now.
Mhm. And so another thing that you mentioned, Ed, is looking for stocks setting up in proper chart patterns on or around the follow through day and adding your exposure that way. And I think some of the more kind of growthy stocks that we saw doing that were in the chip sector. And I know our audience here today very interested in what's going on in semis, and this was in a way, I guess, either some sort of head fake or at least just a short-term move. Rambus RMBS. This one was flashing an RS line, blue dot kind of around that follow through day, AOSL as well, clearing a trend line and presenting an actionable opportunity on the follow through day too. But these breakouts were short lived and they failed. So even that is something that you don't want to get caught flat-footed in when you see everything is checking off the boxes. All right, this is meets all of my fundamental and technical criteria. It's breaking out on the follow through day. I'm following all of the rules, but you an important rule to keep in mind though is sell rules when you're buying. So you can't ignore the sell rules when you do see something that uh, breaks your expectations.
Yeah, and that's so important. I mean, you should have an exit strategy when you buy, and you can adjust it. I mean, if the stock is going up and up and up, you can adjust how you're dealing with things. But you buy on fundamentals and technicals. You're looking for quality stock, quality companies with strong fundamentals, but then the technical action. But you really need to sell on the technicals. And we saw so many of these chip names. There were some really strong breakouts, and yeah, they failed really fast. And you have to be ready to be getting out. I mean, they had that big reversal day, and then the next day, when it sold off, you were either taking a loss depending or almost seeing all the gains go. You needed to be either out or really slashing losses right in there. That is not good action. The fact that so many other chip makers that had been coming up were selling off as well. There wasn't a whole lot of news at the time. I mean, now after the fact, you can sort of, oh, I see there's this and that reason why there just seems to be less demand for consumer electronics and, a lot of the, but at the time it was like, it wasn't really clear. And
Hmm.
that you just have to rely on those technicals and not get flat footed, not freeze and say, well, no, there's a story. This was working. It's like, it's not working now.
Exactly. That's such a great point there. Okay, well, what is working? I feel like this is another layer here that is added to the market complexity is with the crazy broad market action underneath the surface, there has been a raging bull market in cyclicals, commodity related stocks. So if you've been in the right places and filtering out the noise, so to speak, there's been a lot of opportunities under the surface. Doesn't mean it's been easy by any means, but if you know where to look, there have been some really great opportunities.
Yeah, I mean, it's sort of colored here because at IBD, we often try to focus on those growth companies that's traditionally there, but there's a lot of money to be like, yeah, the energy stocks are doing well, the fertilizer maker, the steel makers, the miners. These are all areas that are doing quite well. And there's a few other sectors, medicals have done pretty well. Nice defensive growth in health
Mhm,
insurers. There's some drug makers, some medical device makers and product makers are coming up as well. So there are big
mhm,
areas of the market that are doing well, and it's just sort of a strange situation. It's sort of like when you have this sort of scattered showers and one part of town is getting big showers, another one is like it's sunny, and it's a little weird. It's like you can't go that excited because split markets aren't as safe. And it's like, well, are we going to, we saw a lot in 2021. We rotated from one sector to another, or the whole market might weaken, as well. But
mhm.
definitely, that there have been, that's if you're going to be invested in the market, those are the areas that have been working and really should be trying to focus on pretty almost exclusively, really, because nothing else is working.
Mhm. Okay, so Ed, I'm sure our audience is asking, okay, well, how do I spot these strong groups before they surge, before they go on multi-month runs? I'm going to pull up my screen here again. I'm going to show here's the XLE ETF tracking the energy sector and what a move this group has had this year. So, how should investors uncover this strength as it's getting underway?
Well, you can see some of the action here. I mean, look, you should be running screens and just sort of be looking through a lot of these sectors and just finding the stocks in there. But just on XME, it was coming up, it was basing, it didn't fall off that much, in late last year when the NASDAQ was silly selling off. I mean, obviously energy was doing better. And then it broke above here and it set up, you know, that began another run. And a lot of these had pretty strong runs in 2021. So this was coming in. You want to be looking for stocks that have already been doing well. You're looking for relative
Yeah.
strength lines that are at least holding up. And there was a wave. I mean, some of them came in right then, but there was over a few weeks you saw a number of them doing it, and there were some pullbacks in various times, and a lot of them are now setting up. We're seeing, especially some of the giants are forming bases once again. So there have been opportunities. I mean, you don't necessarily get the first run. I mean, a lot of these have had huge runs, and it doesn't mean that they'll keep running. Maybe this is the top, okay? But this is how you can be finding it. Looking for stocks and sectors that have been in uptrends and are now consolidating or now pulling back. Those are going to
Mhm.
tend to be the ones that are going to continue to do well, rather than trying to find groups that have sold off and are really weak and try to predict the bottom.
everyone. Thanks so much for watching Investors Business Daily on YouTube. If you want to watch more videos, make sure you hit that subscribe button so you don't miss a thing.